Well, it's been a mixed bag for tech earnings over the past few weeks. The big names, Apple, Twitter, Google, and Amazon, all released quarterly results over the last couple of days. So joining us now to wrap up earnings season is Mark Yusko, CEO of Morgan Creek Capital Management. Mark, great to speak with you today.
Thanks for having me, Morgan.
So let's start with Apple. There's been plenty of good news from Apple at the quarterly earnings. It trounced quarterly earnings, revenue estimates as well. We saw the soaring iPhone sales, more than 60 million, a share repurchase program that was bumped up, a dividend boost. I mean, I could just keep going on here. But all of that being said, you look at shares of Apple, they're up about 20% this year. We're near all-time highs. Is there room for this stock to keep climbing?
Yeah, we think there's lots of room. I think this stock actually, if you can believe it, is cheap. It's hard to use that with something that's valued at, company at $800 billion close to. But we think it's cheap, and we think it could go to over $200. This company is dominating what they do. You walk through the airport, everyone's got an iPhone or an iPad. Everyone's looking at an Apple screen. And they're just tapping into, kind of the App Store revenues part of their earnings. So there's a lot of growth left. And, Carl Icahn put a $203 price target out about 9 months ago, and people thought he was crazy. It doesn't sound so crazy now, does it? It
doesn't, and I guess then a $1 trillion company doesn't sound crazy either when you think about it like that. Let's turn to I guess, a reverse story. Let's talk about Twitter. It was a really pretty harsh quarter for Twitter. I mean, in addition to seeing earnings released early, those earnings were disappointing. We had revenue that fell short of estimates, mobile user growth that also missed estimates. Now, based on all of this, have you, and I guess you could say the street, lost faith in Twitter? I mean, what are your thoughts on this social media company?
I think the tough thing about story stocks, stocks that don't really have lots of earnings and lots of revenues, is that they're going to be very volatile. I remember being on your guys' show back when Twitter went public, and it popped that big amount that first day, and I think it's trading right around where it was that first day now, maybe even a little below. So you're going to have lots of volatility and lots of expectations. At the end of the day, it's about execution with these companies. Twitter's a great product. I like it. I use it. I'm at Mark Yusko, and I think it's fantastic. But they have to figure out monetization. And if you remember, Facebook really struggled with this for a long time. Stock went down a lot, and then it became a great buy, and now it's become a dominant franchise. So as long as they keep growing, as long as they keep getting users, and then figure out the monetization piece, they'll be fine.
Yeah. And of course, we could talk about so many other names, but I think maybe it's time to get your opinion on what the big winners are in the whole tech space. I mean, where would you be putting your money right now? What names?
Yeah, well, we do like Apple. We own a little bit of Apple, and we are really big fans of the China internet, the Chinese internet companies. So our favorite company out there is VIP Shop, VIPS, and we think they'll have a blowout quarter again. This is an e-commerce company. Think TJ Maxx without stores in China. So really great business model, lots of growth opportunities. So we like that company. Baidu had a little bit light guidance last night. So that's probably going to sell off a little bit this morning. But we think Baidu and Tencent are dominant franchises in China internet as well. Everybody's talking about Alibaba. Alibaba is having the growing pains of, again, heightened expectations, whereas Apple, I would say, is cheap. Alibaba is pretty fairly valued. We like the story long term. We think the BAT, Baidu, Alibaba, and Tencent are the dominant franchises in Chinese internet. But I think it's going to be a struggle here in the short term. So long term, great stories. But we really like these smaller e-commerce plays. There's a company YY out there that we like a lot. Really interesting businesses.
So Chinese e-commerce and Apple, and actually you could probably make the argument that Apple is a play on China in its own right with all of the device sales that we're seeing there now.
Yeah.
Mark Yusko, great. Oh, sorry, go ahead.
I was going to say, and you could throw China Mobile in there too as the carrier that's selling all the iPhones to the people in China to do e-commerce and wrap it all together.
Well, there you go. Mark Yusko, great to speak with you. Great to get your picks. Thanks for watching. I'm Morgan Brennan. Have a great day.
Thanks, Morgan.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.